Well, we got the message anyway yesterday, didn't we? And what did you make of these proposals?
Well, I think it's very positive, actually, because, banks started trading in all these sort of derivatives. They've actually been sort of competing with their customers. Goldman Sachs Private Equity has been buying businesses which maybe one of their clients was going to buy. And actually, when you look at it, credit default swaps, if they didn't exist, would the world be a poorer place? No one really understood them in the first place. A lot of these sort of financial instruments no one really understood. The wizards of Wall Street came along and said, don't worry, we understand them. We've made huge profits, so pay us big bonuses. We're not quite sure how they all unwind in the end. So although it's painful for the banks, I personally think it's very positive going forward. And I think a lot of all these...
Are we going to have lower profits down the line now as a consequence of this?
We're going to have lower profits from the likes of sort of Goldman Sachs and JP Morgan if, they pay out big bonuses. Goldman Sachs yesterday on their results were in line at the revenue line, but a huge beat at the sort of earnings line because they didn't pay any bonuses in the fourth quarter. You're right, though, if you've got lower profits, then that feeds through into lower tax revenues. And people forget, everyone knocks the city the whole time. It's very easy to do. But 25% of government revenues tend to come from the financial sector. So it's all right for Obama to stand up there and say, hey, we've got Wall Street on the run. But, he's a bit short of money himself in terms of balancing the budgets.
So it's a case of having a cake and eating it too, I suppose.
It is, but I mean, what he wants to do effectively is get banks back to old-fashioned. My dad was a bank manager, and all he did was collect money in the morning, go for a long lunch with the builder, and lend it to a house builder in the afternoon. A sieve to him was something my mother used in the kitchen. All these sort of off-balance sheet sort of vehicles, which have been used up to create huge leverage in the system to generate profits, have got to go. And basically, you get back to old-fashioned banking, where you actually, you control your balance sheet, you lend money, and for the investment banks, I think it probably means going back to the old relationship banking, where they're advising clients and acting in their clients' interests at all times.
Right. We've got about 8 minutes to go before trading starts off, and we've got a turnaround there for some of those banks in Asia. We're going to see perhaps not that much of a markdown in terms of the banking shares in Europe when trading starts.
I think, the European banks are much better spread. The likes of sort of RBS got hit yesterday. I think Barclays is probably the one that's going to be under the most examination because, Barcap has been such a massive contributor to the Barclays profits.
OK, what about generally your strategy right now? Are you bullish still? You were last year.
Well, it was right to be bullish last year, so thanks for... I'll pay you later for that one. And this year, I'm still pretty positive on the market in terms of there's a lot of companies, and we've seen it today with Invensys, who are coming out and they're actually earnings ahead of expectations because the cost cutting that they made is now benefiting from just a slight pickup in the top line through restocking. And I think as we go through the year, we probably will see a bit more sort of M&A activity, which is going to come in. And I think that the markets will, generate a positive return this year.
No, but is this a correction we're just having at the moment after these gains that we've seen? Is it just a gut check, or is it actually perhaps signalling a period where we go down for a while?
Well, you look at the UK market, it's a bit like comparing Arsenal and Tottenham, isn't it? As Tottenham fans together, a lot of our players are actually British, and so compare that to Arsenal, where there are no British players, and you look at the UK market now, then, a large proportion of the market depends on what's happening overseas. China is a big impact. If China sort of sneezes, we catch a cold. The mining stocks and oil stocks are 30% of the UK market. We've seen spectacular gains during the last year in that particular sector, and a bit of a slowdown in China, then you're going to see profit taking in those stocks, and that's going to hit the market in the short term.
But the Chinese authorities are concerned about themselves being in a bubble. What's your view on that?
Well, I think they should be concerned. I mean, growing at that sort of rate, 8 or 10% a year, is very, very hard. Credit growth is huge in China. How many bridges, how many roads, how many airports do they actually need? Are they just sort of building things just to keep the show on the road? A bit like Japan's been trying to do for the last 10 years, trying to regenerate economic growth from actually sort of huge stimulus.
OK, Andy, well, thank you very much indeed for coming in. Great to see you as ever. Andy Brough there from Schroder Investment Management.